Okay, guys, I'm back with the second trade of the day. So I'm just gonna go ahead and put in the order. So we'll put in just the entry level so we don't lose where we at and what time. I got in at 6:20 a.m. So this is this time. Let's go over what happened after the first trade and what made me get into this trade right about here. All right, so this is the hour chart right here. We already know what's going on in the world. If you watch the second video, I already went over everything with Donald Trump saying there's going to be tariffs issued against Canada, China, and Mexico. And then I went over Trump saying, I'm capping, I'm not going to do any tariffs for another 30 days. So I'm bullish on today. Today, when I woke up this morning, I said I'm bullish. And I also want that was my phone falling, guys. I'm sorry. I also want to go over something that I didn't go over in the last video. So remember how I kind of was like, I don't understand how I got into this trade. I figured out what had happened. So going into Monday, I knew that like I already knew about the tariffs and stuff like that. And I was at work all throughout the day. I don't get off of work until maybe like 2:30 and stuff like that. I didn't know Trump took back his statement of him doing, him issuing the tariffs and stuff. So I had a sell limit order right here at this swing high because I was thinking that price was gonna, come up to this level and wick out and come back down. And eventually that is what happened. But if you guys watched the last video, we got in right here and we were in a ladder drawdown. And luckily, I wouldn't say luckily, but price followed, market structure and, just didn't go as high as this premium level up here, this 100% level. So that's why I got into that trade and stuff like that, was because it was a sell limit order. And luckily we got out right in time. We could have stayed in a little bit longer, but we did get out right in time because this is what happened after that. And this was obviously when kind of around the time when Trump and Mexico had the conversation about the tariffs. And I'm pretty sure this right here, this little area of time is where Trump was like, yeah, I was capping the whole time about the wait, this is wrong. This is the next day. So this little area. Wait, am I tripping, guys? So this is what 22 is what is 10 o'clock, right? Okay, yeah. So this candle right here is the candle where uh Trump. So this is the candle where Trump had backed out of the Canadian, tariff and stuff, and then price started to fucking retrace and stuff. Okay, I'm fucking rambling. All right, so let's go into the trade today. Like I said, I was still bullish on today because of the, Trump retracing the tariffs and shit like that. So boom, I wake up this morning, I look and see what London session did. Okay, so we see London session came back down like I wanted it to. I didn't stay in long. I didn't stay out through the whole play, but I knew price was gonna go back down. I just had a feeling. And what I was expecting was price to just, do kind of something like this. Oh my God. I was expecting price to kind of do something like what this candle did. You see, with this candle, it barely, it tapped it and then just went straight up. So I was expecting price to kind of do what that did. And it did do that, but it went back down. It went even further. And you can see it broke, it broke structure right here. This would be fair to say that this is liquidity right here. There's liquidity. I would say that this is liquidity. Because look, you have this wick candle right here. You have this undecided candle, and then you have these three bearish candles. Right here is equal is kind of. I'm pretty sure if you would go down into the chart, you would see that this right here is an equal level. There's probably hella wicks right here around this level. I like to do it at whole numbers, 5 zeros, stuff like that. So boom. So we see this is we'll say that this is an equal low. And when I'm at work, guys, I kind of stay in that 30-minute, 15-minute time range. I never try and go down smaller than that because it'll throw you off. It will throw you off. So I would say that this is liquidity. So when I was like, man, this is liquidity right here. And I saw that this was established as I established this as a swing low. I established this as a swing low right there because how I identify swing lows is with 5 candles. So you kind of have it like this. You got 1, 2, 3, 4, 5. Right here will be the swing low. Then right here you have this. You got 1, 2, 3. This is a swing high. All right here, and then you have another high, a lower high right here, and it goes down, and then you got a lower low. So I saw that it bounced off of this swing low perfectly, and it bounced off this fair value gap without mitigating, without fucking even going in it, and it then bounced off of, I mean, we just made this, but I would say that this would be a equal low. Let's look on the map. Okay, so it's not really an equal low. Yeah, it's not really an equal low. Don't really see anything, but yeah, I would definitely say that this is liquidity though. I would definitely say this is liquidity. Price didn't even do anything right here. It just went up. It reacted right here though. It did react right here. So I see that, and I see that it is a higher low, and it bounced right here. Boom. Price goes up. Price goes up. It comes back to the 50 line. Comes back to this 50% line. In this little Fibonacci from the 0 to the 100, right here would be a premium zone, and this right here would be a discount zone. So price comes to the 50 line, the 50% line, goes down here, touches this fair value gap created, or it created a fair value gap. It touches that, creates a fair value gap, and continues to go up. And this is all during London session. So I say to myself, cool, we are in an uptrend. Confirmed we are in an uptrend. So we're staying bullish. Okay, so like I said, guys, oh, shiza. We had already said that this right here, oh, shit, I hate when stuff moves. I hate when stuff moves, bro. I'm not gonna lie. I hate it. Okay. So we established this as a swing high. You see price react to the swing high right there. So, boom, we see all this during London session. I woke up probably around this time, around like, I don't know, I can't remember. I think I probably woke up at like 4. I woke up really early this morning, hopped right on the charts, and I was seeing this. I want to say I can't remember what I saw. I may have saw this or something, but we got into the trade at 620. We got into a buy at 620, guys. We got into a buy at 620. Reason being is we saw London. We already saw the retracement. We don't need to see another retracement. We don't need to see another, we don't, like I said, we don't need to see another retracement down to the zone. Because if we see another retracement down to the zone, we know that it's a downtrend. Okay, we don't need to see that. We don't we already see that it came to this 50 line and it grabbed liquidity at the 50 line because we know a bunch of traders probably got in at this 50 line thinking it was gonna bounce, and it did. It did bounce. People got in right here, it bounced, and you know what people did? People held because they held strictly because they knew that price was gonna go up. And what happened? Liquidity. Liquidity happened. It was a fake out. Well, a breakout. It did break out. It broke out and just grabbed liquidity. It already grabbed liquidity at this 50 line, so we don't need to see it again. So I saw that, and then I see this. I say, okay, this right here is right at the price from yesterday, and it didn't really break it. It was more so an equal high. Like, this is kind of an equal high, would you say? So I'm assuming, like, man, there's a lot of stop orders. There's a lot of stop losses up here. Okay, if the market decides to go up here, it's gonna trigger all these stop losses and liquidity. So I said, okay, let's enter a buy. At 620, we see all this. We see this wick down to the down. We see this wick to the downside. I'm like, ooh, that's interesting. This is liquidity, almost like search, like, you know what I'm saying? This is almost like liquidity. So then I see this right here create a demand zone, and I had a where this was a God, oh, what candle was this? Oh, this is me. That was me just saying where people got in. Wait, what is this? This must have been something when I woke up in the morning and did. Okay, so or did I just do that? I don't know, guys. Kind of tripping. Okay, but you can see this too, right? You can see that this is an equal low. You see these two equal lows right here. Boom, boom. Okay, so uh this created a fair value gap right here. We see price come down to this to this swing. What is this? The swing high? Oh, it's blocking all of that. Yeah, the swing high. And it bounces and it still can't break that structure. So it goes down, grabs liquidity, then retests this zone, makes a demand zone, and we get in right here. Let's get into the 5-minute zone. We got in at 620. Dude, I feel like I was rambling, dude. I was chatting. All right, let's get into the entry price. Excuse me, sir. Sir. All right, so where did we enter? We entered at 32.48. No way, that was 32.48. We took profit at 34.75. Okay. All right. All right, so this is the play that we caught. We did partially close on one of these positions because honestly, like I said in the other video, dude, wasn't supposed to trade today. Like, if I was following my rules, like I would have stayed off the charts, honestly. But I mean, shit, you come into the market and you wake up in the morning and you look at the chart and you see what London session did. Like, dude, you're gonna hop in a freaking trade. If you know how to trade, bro, you're gonna hop into a trade. Because look, I mean, it's just too perfect. You see the liquidity under the zone, and you see the liquidity under the zone during, what is this, Asian session, and then London session, it just comes up here and can't break this, and then it comes down and retests, and just like, and it's a fair value gap. Like, it's just, I mean, I don't know. To me, it just makes sense to get into a trade. But guys, look how much money we left on the table. You know, we really could have went crazy this play. But, you know, I made the certain amount of pips I made. We made 22.7 pips, and we wasn't even supposed to be on the charts. Like, I'm perfectly fine. You know, I basically took profit where we entered yesterday. And dude, I was cool with it because I mean, we're up on the count. I wasn't supposed to trade today, and we made the money. So as you can see, the trade played out. I mean, it played out. I should have stayed in, but you know, when you're following your rules, you're following your rules. You can't blame yourself for following your rules. I took a little above, a little above this high. Just a little above. But like I said, and I was at work too. Like I don't always want to just be looking at my phone, even though today would have been a good day to just be on my fucking phone, right? But you know, you just, you know, sometimes you know, this happens and it's okay. Pat yourself on the back for being right and taking the trade. And you know, next time we're gonna do better. So guys, I also want to go over kind of like what I do, journaling and stuff like that, to bring these videos to you guys, because as you can see, the past few days, this is what I've been doing. I've been doing these recaps, and I've been journaling, making sure I get the entry price, and stuff like that. So what we're gonna do is I'm gonna show you guys how I journal. So what I do is I say if I'm either in a buy or a sell, right? So obviously on this play in particular, we're on a buy, right? So we look at our entry price, what price we entered at. We entered at 103.248. And how many units did we have? Okay, so I put the units, I put the day, and I put the time that I entered the trade, okay? Also, I put at the prices that I closed, right? Okay, so I fully closed the play at 103,457. I mean 475, and we made a total of $3.28. Okay, so then what I do is I put the balance. Right now the account's sitting at $121.49. And then I go into the profit. So what I do is I don't really, since this is Forex, I don't do like the money as the profit. I do the pips as the profit. So on this play right here in particular, we made 22.7 pips. Okay, so I will put profit 22.7 pips. Okay, and then we're gonna look at the potential of the trade. So the potential, you only use the potential of your trade if your trade goes higher than your take profit, or if you okay, I'm sorry. You don't put potential on your trade if price doesn't go higher than your take profit, or if your trade hits your stop loss. Because if your trade hits your stop loss, there was no potential to the trade. You lost the trade. If your price hits your take profit and it hits at the highest point of your trade, then there's no potential. You had 100% potential. But let's be honest with ourselves, 99.9% of the time, we always get out before 100% potential of the trade. So 9 times out of 10, or maybe 50-50, there's going to be no potential, depending on you know, how you're trading. But in this case, price didn't hit my stop loss and I got out early. So there was a lot of potential. There was potential to the trade. And I like to keep track of these things because it gives you more of like an idea of how much pips your pair can go before you get stopped out or before it hits your take profit. You know, because you want to understand your pair. You want to know like exactly how many pips it it could go up. It might range from uh it might range from 50 pips. It might range to 100 pips, 200 pips. It depends on whatever pair you're trading. For EURUSD, I already know that it's a stretch for EURUSD to go up 100 pips, 90 pips, 80 pips. Okay, it can go to 80 pips. It can go to 90 pips, but it's very rare for it to do that. Especially when you're just intra trading. Like it's not gonna go 100 pips in one direction. It's just unlikely unless like shit just got real. Okay. Um, but in this case, this would have been about 60 point. This would have been 60.3 pips. And what I also like to do is when I'm doing these potentials trades, I don't like to it's like I said, you want to be real with yourself. It's unrealistic that you're going to get the top of the wick. It's what are the chances of you doing that? People, you can do it, but what are the chances? So what I like to do is I like to be like, okay, well, where's the highest point, and then where is the likely chance of, if I knew it was gonna hit this, where would I have put my take profit? And like I said, I like to do whole numbers. I like to do psychological numbers. So I would say I would have gotten out around this 38.50. Okay. So you see the potential. The potential of the trade was, this was supposed to be a 60.2 trade, right? But we only made 22.7. So what I like to do is I like to go to the calculator, right? Go to the calculator, boom, boom, boom. I do 60.2 minus 22.7, and then this is the amount that we left on the table. So we left 37.5 pips on the table. Now, that is disgusting. That's disgusting. That is the most amount of pips that I've left on a trade ever since I've been trading this live account. That is insane. I literally got out of this trade simply because I wasn't following my rules. And I didn't want to take a loss because I wasn't following my rules. And I'm fine with that, bro. I'm fine with being responsible and getting out when I'm supposed to. Or just being safe, rather safe than sorry. And then I also like to do max drawdown. So right here, the price really didn't even go 5 pips. Didn't even go 5 pips. So if I was scalping, if I was a scalper and I was doing something like, oh, I want to do a 5 or a 10 stop loss to freaking 60, it would have been a nasty trade. But this right here, I literally had, I had drawdown obviously, but this is a 1-to-4 ratio right here. This is a 1-to-4. This is a really good trade. You don't want to be greedy, man. Because really, if I took this trade where I took it, it would have been a 1-to-12. It would have been a 1-to-6 ratio win. It would have been insane. And we did already catch a play like that, which was here. This right here was a 6-to-56, which is like a 1-to-9 almost, like a 1-to-9. So, we're not trying to give back any of the fucking money that we made this week. I don't give a F. I don't give a F, okay? It's a weird week, and we want to stay green. So we're going to put the max drawdown at about 5 pips because nothing is ever really just going to go up. Like nothing ever is ever just going to go straight up without, you being in drawdown first. And the reason why I put max drawdown for each and every trade is because I need to know on average how much drawdown does my trades carry every time I get into a trade. If I go back this month of February and I'm like, February, I had a max drawdown amount of, let's say, 36 pips, then I know that next month when I trade, each of my trades need to be at least 36. It needs to be at least a 1 or 2. It needs to be at least a 1 or 2 to 36 pips. Stop loss to maybe 70, let's just say 72 stop loss. I mean 72 take profit. Because I'm looking and I'm journaling and I'm making data like, okay, this is on average how it works. So that's the importance of journaling, and I feel like that's the importance of doing it this way, because you get your entry price, you get your close price, you're seeing what time you trade at. Okay, you're seeing how much you made or how much you lost. You're putting your balance before and after the trade. Okay, you're putting your profit, how much you made. For me, I put pips. You may put percentages, or you may actually put a number. And then you can put your potential, so you can understand, like, man, if I'm winning a trade, if it doesn't hit my 36 stop loss, right, 9 times out of 10 it's gonna hit my 60 pip take profit, because you've made that experiment. You've like, if this happens, then this will happen. You're testing yourself and you're understanding how many times this outcome is going to happen. So I feel like that's the importance. And you'll be able to accept when you're wrong, because you'll be like, well, I made this track record that if it goes 36 pips, or if it goes this amount of pips, that I lost the trade, and you'll be fine with that, rather than being like, oh man, this isn't fair, or however you may think of it. So yeah, guys, that was the trades for today. I hope this video wasn't too long. I hope you guys enjoyed it. We will be back on tomorrow, and I hope to see you guys there.